Hello Year 11 and welcome to your balance sheet revision session. Today we're going to look at Vinyl Revival. For our balance sheet, we need to start off by referring back to the start of question 2. And in that bit of information, it is likely that it will tell you how much your opening capital is. And that will be the only or the main bit of information you will need for your balance sheet. If we look at this section, we know that there are two people that have purchased the shop initially, and they've both put in a capital of £2,500. The next bit we need to look at will be provided just before your balance sheet, and this will be a table showing your assets and your liabilities for both years. Now we've got that information, we can start filling in our balance sheet, our 10-mark question. Now this is a fairly straightforward 10-mark question for you to do well on in the exam. If we look at our equipment, which is a part of our fixed assets, remember a fixed asset is something that we own for 12 months or more. We can see in 2015 we have £4,000 worth, and in 2016 we have £3,500. So we just bring that information across into our table to get our first mark. Our second mark in this example comes from our current assets, and our current assets are things that we own for 12 months or less, which can be stock, it can be a debtor, or it can be money in the bank. In this example, we go back to our table and we see that our stock in 2015 is £650, so we bring that across to get our second mark. Nice and easy so far. However, now we need to look at our bank. Remember, money is our assets, our current assets are things that we own. And in this case, we have a negative number. Now, therefore, we don't have any money in the bank in 2015, so we put a 0. And we use that money, so our negative £400, okay, and we can check that as it shows that we have a bank overdraft of £400 to cover that debt. Going back to our blank line, and by now we should know that our blank line means it's a total. So we can check our 2015 figure, 650 plus 600 equals 1,250. And we can add our three figures together in 2016 to give us 1,800. Again, another easy mark. If we look again now for our current liabilities, and our liabilities are things that we owe. So we owe some money to our creditors, and we owe some money for a bank overdraft. Now in 2016, we're in a positive number. So therefore, we don't have a bank overdraft. So we put a 0. And again, we can check to see if we're right because we've got another blank line. So again, a total. And we're adding these figures together. So 350 plus 400 equals 750. And 600 plus 0 equals 600. Next comes the slightly more challenging part. We have our net current assets, and you need to remember that these are our current assets, take away our current liabilities. In this case, we don't need to do anything because it's calculated for us. However, our total net assets are our fixed assets plus our net current assets. So if we double check this, we've got our £4,000 in 2015 plus our £500 worth of net current assets equals £4,500. In 2016, we do a simple sum of £3,500 for our fixed assets plus our £1,200 for our net current assets, giving us a total of £4,700. Now we move on to the bottom part of our balance sheet, which is how we have financed our business. So we know we need to find out what our opening capital is. And in this case, and in most cases, it will be in this initial bit of text at the start of the question. And I know that there's two people and they've both put in a total of £2,500. So therefore we add those together and we have a opening capital of £5,000. It's even easier for 2016 because it is just our opening capital for that year is our closing capital for the year before. So we just bring that figure up and we put it in our opening capital. So far we've got 9 marks out of 10, so we need to total this off by doing our final calculation. Again, we've got a blank box, so we know that this figure here is a total. And therefore, we use that 15,700 and we take away our drawings, as it suggests, it is drawing something out, which is £11,000. So therefore, we have a closing capital of £4,700. Now, if we want to double check to make sure that we have this question right, then we can look at our closing capital in our finance buy, and we can look at our total net assets, and they should balance. If we do the same for the 2015, it's the same figure. So hopefully, by looking at those and by working through this question with you today, it should help you with your balance sheet. Thank you for listening, and if you have any questions, please send me an email. Goodbye.